Hey there, fellow investors. Today, we're diving into the exciting world of dividends. Dividends are like getting paid to own a piece of a company. That's right, pure profit just for being an investor. We'll uncover what dividends are, how they work, and why they should be on every investor's radar. Get ready to unlock a powerful tool for building wealth. Dividends can be a game changer for your investment strategy. They provide a steady stream of income, boosting your returns and helping you reach your financial goals faster. Whether you're a seasoned investor or just starting, understanding dividends is crucial. So, let's get started. Now let's break down what dividends actually are. Imagine a company making a profit. Instead of keeping all the money, they decide to share a portion with their shareholders. That's a dividend. It's like getting a slice of the company's success delivered straight to your pocket. Dividends come in two main flavors: cash dividends and stock dividends. Cash dividends are straightforward. You receive cold, hard cash directly into your brokerage account. It's like getting a paycheck from your investments. Stock dividends, on the other hand, are like getting bonus shares of the company. Instead of cash, the company rewards you with additional stock, increasing your ownership stake. It's a powerful way to grow your investment over time. Understanding the dividend timeline is essential for maximizing your returns. Think of it like a countdown to your payday. The first date to remember is the declaration date. This is when the company announces its intention to pay a dividend, like sending out an invitation to a party. Next comes the ex-dividend date. This is crucial. To receive the dividend, you need to buy the stock before this date. It's like RSVPing to the party on time. Buy after this date, and you'll miss out on the dividend payout. The record date is when the company checks its shareholder list to see who's eligible for the dividend. Think of it like the bouncer at the party checking your name on the guest list. Finally, the payment date is when the dividends are distributed to shareholders. It's payday, folks. Cash dividends are typically paid electronically, appearing in your brokerage account. Now you might be wondering why companies would willingly give away a portion of their profits. Well, it all boils down to attracting and rewarding investors. Think of dividends as a way for companies to incentivize you to invest in them. Companies that consistently pay dividends are often seen as financially stable and well-managed. It's a signal to investors that they're confident in their ability to generate profits over the long haul. It's like a company saying, "We're doing great, and we want to share the success with you." Dividend payments can also attract institutional investors, such as mutual funds and pension funds, who are looking for stable income streams. This increased demand for the stock can boost its price, benefiting all shareholders. It's a win-win situation. How dividends boost your portfolio. Now, let's talk about why dividends are a powerful tool for investors. First and foremost, dividends provide a steady stream of passive income. It's like having your money work for you, generating cash flow even when the market is volatile. But it gets even better. Dividends have the potential to compound your returns through the magic of dividend reinvestment plans, or DRIPs. With DRIPs, you can automatically reinvest your dividends to buy more shares of the company, compounding your returns over time. Think of it like a snowball effect. As you reinvest your dividends, you buy more shares, which generate more dividends, which you reinvest to buy even more shares, and so on. It's a powerful strategy for building long-term wealth. Risks and considerations. While dividends offer numerous advantages, it's important to be aware of the risks and considerations before diving in headfirst. Remember, dividends are not guaranteed. Companies can reduce or eliminate dividend payments at any time, especially during economic downturns or if they face financial challenges. Another thing to keep in mind is the trade-off between high dividend yields and capital appreciation. Some companies prioritize dividend payments, while others focus on reinvesting profits to fuel growth. It's essential to strike a balance that aligns with your investment goals. Lastly, don't forget about taxes. Dividend income is typically taxable, so factor that into your overall investment strategy. Consult with a financial advisor to optimize your tax efficiency. Dividend champions and success stories. Now, let's bring dividends to life with some real-world examples. Companies like Coca-Cola, Johnson & Johnson, and Procter & Gamble are known as dividend aristocrats. They have a long history of consistently increasing their dividend payments for decades, showcasing their financial strength and commitment to shareholders. Let's take a look at a case study. Imagine you invested $10,000 in Johnson & Johnson 20 years ago. Through the power of dividends and dividend reinvestment, your investment would be worth significantly more today. That's the magic of dividends. Dividends have the power to transform your financial future. By investing in companies that prioritize dividend payments, you can build a portfolio that generates passive income and outperforms the market over the long run. Dividends. So there you have it, folks. Dividends are a powerful tool for investors of all levels. They offer a way to generate passive income, boost your returns, and build long-term wealth. Now, it's time to take action. Start researching companies with a history of paying dividends, explore dividend reinvestment plans, and consult with a financial advisor to develop a dividend-focused investment strategy that aligns with your goals. I hope you found this information valuable. If you did, give this video a thumbs up, leave a comment below with your thoughts, and don't forget to subscribe to my channel for more investing insights. Until next time, keep investing wisely, and may your dividends flow freely.